Investors, hello! This is Stock AI Insights, and I'm your Chief AI Analyst. Today, we are parsing what was said in NVIDIA's Q3 2026 financials, released for the quarter ending October 26, 2025. Just a quick reminder, this is for educational reference only and is not investment advice. Investing always involves risk. Okay, let's get right to it.
So, the big question on everyone's mind, did NVIDIA do it again? Did they manage to pull off another absolutely record-smashing quarter? The hype has been off the charts, so let's see if the numbers live up to it.
Here's how we're going to break it all down. First, we'll hit those jaw-dropping headline numbers. Then we'll dive into the data center engine that's powering this whole thing. After that, we'll see what's happening with the rest of their business, get real about the major risks they're facing, and wrap up with how they're planning to stay ahead of the game.
All right, Section 1, the quarterly performance. And let me tell you, you're going to want to sit down for these numbers. The scale is just stunning.
Let's just start with the top line. Total revenue came in at a staggering $57 billion. And remember, that's not for a year. That's for a single quarter. It's an absolutely massive number.
But huge revenue is one thing. What about profit? Well, they've got that covered too. Nearly $32 billion in net income. This shows just how incredibly profitable this business is right now. They're not just growing, they're printing money.
And for investors, all of that gets boiled down to this: $1.30 in diluted earnings per share. That's a really strong figure and a key metric for shareholder value.
Now, those numbers are huge on their own, but check this out. When you put them side by side with last year, the growth is just breathtaking. Revenue is up 62%. Net income, even better, is up 65%. And look at that diluted EPS, up a massive 67%. This isn't just growth, it feels like acceleration.
So the obvious question is, where is all this money coming from? Let's move on to Section 2 and find the engine behind these numbers. And as you've probably guessed, it is all about the data center. The company's filing actually points to three huge shifts that are fueling this explosion. You've got the whole industry moving to accelerated computing, the race to build incredibly powerful AI models, and the rise of what they call agentic applications. Basically, AIs that can act on their own to get complex things done. And NVIDIA's Blackwall platform is sitting right in the middle of all three of those waves.
And this chart just puts a giant exclamation point on it. A year ago, the data center brought in just under $31 billion. This quarter, over $51 billion. That's a $20 billion jump in 1 year, from one division. It's just hard to wrap your head around that kind of growth.
But here's where it gets really fascinating. If you break down the data center numbers, compute revenue is up a huge 56%. But look at networking. It's up an incredible 162%. That's their NVLink tech, the super fast fabric that ties all the chips together. It proves they're not just selling GPUs anymore, they are selling the entire AI factory, top to bottom.
Okay, on to Section 3. While the data center is clearly the star of the show, it's really important we get a full picture of the company's other segments to understand the whole story. And wow, this donut chart says it all, doesn't it? At nearly 90%, the data center isn't just the biggest slice of the pie, it is the pie. Gaming, which used to be NVIDIA's whole identity, is now just 7.5% of revenue. Everything else is barely a sliver.
But don't let that dominance fool you. Those other segments are doing just fine, thank you very much. Gaming is up 30%, professional visualization is up 56%, and automotive is up 32%. I mean, for almost any other tech company on the planet, those would be incredible headline-grabbing growth numbers.
Okay, so far it's been all sunshine and rocket ships. But that brings us to Section 4. With this kind of explosive growth, there are always major challenges. And the 10Q lays out some really significant risks and headwinds that NVIDIA has to navigate.
The first big one is geopolitical, the ongoing U.S. export controls, especially the ones that affect business with China and some other countries. And let's be clear, this is not a theoretical risk. It has a price tag. The company had to take a massive $4.5 billion charge on its H20 product line. That was a chip specifically designed to comply with the old rules. When the rules changed again, the demand just evaporated, leaving them with a very expensive problem.
And the problem is, the uncertainty is sticking around. This quote from their filing says it all. They're saying the scope, timing, and requirements remain uncertain. Basically, they're admitting they don't know what the government is going to do next, and they know it could have a really big impact on their business.
The second major headwind isn't about chips at all.
It's about everything else, the real-world, physical limits of building out all this AI infrastructure.
In the filing, NVIDIA points out this critical dependency. Their growth doesn't just rely on making great chips. It relies on their customers having enough space, enough power, and enough money to actually build the data centers to put them in. As they say, it's crucial. If there's a shortage of any of those things, it doesn't matter how many chips NVIDIA can make.
And the third key risk is a competitive one. But it's not just from other chip makers. It's the rise of really high-quality, open-source AI models.
And NVIDIA is pretty upfront about this risk in their filing. They acknowledge that these powerful open-source models are becoming widely available. And here's the kicker. They say if those models are deployed on our competitors' platforms, it could reduce demand for our products. That's a direct admission that their whole ecosystem isn't invincible, and that's a really important dynamic to keep an eye on.
So with all these risks swirling around, how is NVIDIA playing offense? That brings us to our final section. With billions in cash just pouring in, the company is making some very big, very strategic moves.
So what are they doing with all that money? Well, first, they're returning a ton of it to shareholders, $12.6 billion in buybacks just this quarter, with another $60 billion ready to go. But the really fascinating part is where they're investing. They're putting money into a competitor like Intel, and into key AI players like Anthropic and potentially even OpenAI. It seems like they're not just trying to build their own tech, they're investing across the whole ecosystem to secure their central role in the future of AI.
And that really brings us to the core question for NVIDIA going forward. Can the unstoppable momentum of their Blackwell platform and these huge strategic bets overcome the very real hurdles of geopolitics and physical infrastructure? Verdict: NVIDIA's phenomenal growth is on a collision course with some of the biggest challenges in global tech, making its strategic investments a critical factor to watch. What do you think? Share your thoughts in comments. See you next time.